Julius Baer had a very modest beginning, and a long part of our history has been the history of a very small family-controlled bank. Julius Baer himself, he emigrated from Germany into Switzerland, and all banks were at that time were money change houses. So he started in Basel, went over to Zurich after a short while, and eventually bought himself into an existing money change house, Hirschhorn & Grubb. And then in 1900 he got the chance, because one of the partners left the partnership, to buy himself in, and he turned it into Julius Baer. Julius Baer had 3 sons, and that was the beginning of the family ownership and history of the bank. And then as history went on, we came into World War II, and I guess that was the beginning of our global outlook to the world and our global DNA. And then the real history of the more modern Julius Baer started, because back then it was money change, it was lending, it was back-to-back loans, it was a little fixed income, but no equity trading. That doesn't exist, and no portfolio management. That didn't exist either. And then the big change happened in 1975 when the families decided that it is time to change, because the families grew. Maybe at times we grew faster than the business itself, and it was time to turn it into a stock company. And in 1980, after 5 years of a transition period, the families decided to float the first part of the bank at the stock exchange, which coincided to be the beginning of the equity bull market. Because up to 2003, we were still family controlled. We did all the expansion, but still maintaining, through multiple voting rights, the absolute control of the bank. After many, many heated rounds of discussions, we came to the conclusion, with a reasonably narrow vote, to let the bank grow up. And that was the beginning of the new Julius Baer in 2004. It started one share, one vote. 2005, we did the big expansion. We had the opportunity to buy the 5 private banks from UBS together with Global Asset Management. I had the dream at that time to totally change management and the board, to make it a meritocracy and gather the best people possible for the job at hand. So we had a truly fantastic team going into this incredible crisis of 2008. Then the next and last very big decision we had to take was through valuation analysis, because all the bank stocks were very depressed, mostly because of the investment banking activities. So we understood that we had to separate from GAM to make sure that our currency, the currency of the private banking assets, becomes more valuable again, which allowed then in 2012 to buy Merrill Lynch, because they were at the end of their story internationally. And we had a very highly priced currency, and that allowed us to do the ultimate and final step of the expansion after all the intermediate step, buying ING and other banks. So, to make a long story short, it was a metamorphosis. It is interesting to know, today, with Philipp Rickenbacher as the CEO, we have already the 5th generation of professional management at the bank. So it's not true that this is a rapid change of who we were. We as a family, we accompanied the bank as it changed. And we made sure, or tried to make sure, that the DNA stays the same. We wanted to keep on interacting with the clients and with the key decision takers. And I think today we can say proudly that we did successfully so.